There's never a perfect time. There is never a perfect time. It's like raising a kid. You think like, oh, should I have a kid now? Oh, I don't have enough money. I don't have a big enough house. You just figure it out. That's what happened. The timing was right. I felt like I had the most to offer. Credit spreads were nauseatingly tight until they weren't.
Mark Rieder is a founder and chief investment officer at LaMar Assets and senior advisor at Fourier Asset Management. He specializes in credit investing and portfolio strategy, focusing on generating alpha across global corporate credit markets through disciplined analysis, risk management, and opportunistic investing across stressed and dislocated assets.
There are people who add, there are people who subtract, there are people who multiply, and there are people who divide. I always try to add value, but some people that you meet, they'll try and subtract value. They'll complain, they'll tell you what you can't do. You can't market to somebody by telling them what they shouldn't do. You need to tell them what they should do. I'd also say that it takes 99 no's sometimes to get to one yes.
Mark, very good morning to you. Thanks so much for joining today.
Good morning, Bill.
It's wonderful to have you on the show, Leaders in Capital. Mark, really excited to get into the conversation. Could we start off with just hearing a bit about you and what you're up to at the moment?
Well, I'm Mark Rieder. I wear many hats. I'm a dad, a husband, an author, an entrepreneur, and I'm working with some really brilliant people to build the premier global credit asset manager.
Fantastic. Well, that sounds incredibly exciting. Looking forward to hearing more about that. But today, I'd love to start off just by hearing a bit about your path to that, where it started, why it started, and a bit about the journey so far. So let's start off with why finance? How did that come about for you? And when was it that you knew you wanted to get into the industry?
Well, Bill, I think it's really important point that growth is not linear. And my journey into credit has been anything but a straight path. I like to sail small boats, and you learn that sometimes if you want to go from point A to point B, you can't go there directly because of where the wind is. You have to zig and you have to zag because of the wind. And so my journey has been a lot like that. I also have, if you can see the prop, right? It's a piece of wood. It's a cross section of a tree, and if you look at a tree, you can see the rings. And in some years they have slow growth. And other years they have faster growth. I didn't get into finance right away, but I zigged and I zagged. And yet every experience that I've had has broadened my toolkit. I started off at a company called Deloitte, an accounting firm. It's where I learned how to analyze a balance sheet. I went to Goldman Sachs. I learned how to be commercial. And then I moved to the buy side, and that's where I learned to use information to construct portfolios, to manage risk, and to generate alpha. And then I went to GIC, which is how I learned to operate at scale. But I think, if I dig up a little bit or dig deeper into that and where I started, I grew up on Long Island. My parents never went to a four-year college. My dad was a t-shirt salesman. He was very entrepreneurial. At a certain point, he had a few stores at a few malls in Long Island. But in the early 1990s, there was a recession. I don't know if you remember, and it nearly bankrupted his business. And so that coincided exactly with when I was going to college. So I had to pay for college myself at SUNY Binghamton through loans, financial aid. It was really tough, and I wanted to go into finance. But I took a bunch of finance classes, but finance firms weren't hiring. So I decided to pursue an accounting degree. And in my junior year of college, I was inducted into the National Accounting Honor Society, Beta Alpha Psi. They had this big gala dinner where they invited all the accounting from New York up, for this dinner. And afterwards, a group of the accounting firms, the people there decided, oh, we're going to go downtown to this bar called the Rat Cellar. And Bill, I was not 21 yet, but I was like, I've got to be in this room with these people. So I went for the dinner. I went home. I borrowed my fraternity brother's ID, and I snuck my way into the bar. And I walked straight up to this woman. I'd seen her at the event. She obviously wasn't a student, and introduced myself. And she's like, by the way, it turned out she was the head of recruiting at Deloitte. And she says, "Oh, can I get you something to drink?" And I look behind the bar, and there's a big sign, and it says Zima. And I said, "I'll have a Zima." And she's like, "What's that?" I'm like, "Oh, it's great." And I had no idea what it was. It turned out it was something between a wine cooler and 7 Up, okay? And, she's like, "Oh, I'll have one too." And so, we chatted for about another, I don't know, half an hour, 40 minutes, and, she turns to me and she says towards the end, she goes, "Mark," she goes, "We're having this student leadership program this summer. We're gonna have a whole bunch of, students, a very select program from around the country, to come to our training center for a week in Scottsdale, Arizona. Would you like to go? I just had someone cancel, and I would love to give you the spot." And I was like, "Oh my God, yes!" And that decision really changed my life because at the end of the summer, my junior year, they offered me a job, and then later they put me into their MBA program, which is where I got my finance degree. And I had to tell you straight off, I could not afford an MBA at the time, so
Mm.
they paid for my MBA. But it was great because I started assembling financial statements, working on offering memorandums for leveraged debt deals, and that's where I really got the desire to want to move into finance. A friend had called me and said that there was a senior high yield analyst at Goldman Sachs who was looking for a junior, and would I meet him? So I went, I met him. I was offered a job. I couldn't say no. The people at Deloitte said, "Mark, that's a great job. You have to take it." And I went, and I worked incredibly hard there. I mean, you have no idea. I mean, our morning meetings were at 7 a.m. I would get in at 6-ish. I turned on the lights at 85 Broad Street, 29th floor, many times. My nights there were with the cleaning staff. If you've ever worked really hard and when the cleaning people are vacuuming, it's tough. And at the same time, I was still finishing the final classes of my MBA. It was absolutely crazy, crazy time of my life. My then girlfriend, and I think this is kind of funny. My then girlfriend, who became my wife, I would work late and nights and weekends, and sometimes she would come to the office to fetch me. And she's blonde, and so we would joke sometimes that she was a Goldman retriever. But yeah, so at Goldman, I got to work with bankers, with CEOs and CFOs of companies who wanted to know what we thought about their companies. We'd go on pitches. Salespeople, customers wanted to know what we thought of the credits and the valuations, and the traders would take prop positions based upon what we thought of the companies and put the firm's balance sheet at risk. I mean, it was absolutely an amazing time to be at Goldman then. But just as I'd had the challenge of a recession as I was going into college and coming out, there was another recession, and the dot-com bubble burst. M&A volumes plunged, investment banking slowed, and it was a really challenging time within Goldman. There were periods of layoffs. People to the left and right of me were getting laid off. I was fine, and I had a great relationship with my boss. There's a story I shouldn't tell, but at the time, David Solomon was running fixed income currencies commodities division. He hired a guy named Roger Gordon to build out the research team, which is how I wound up there. And his goal was to have all the research analysts II ranked. I worked so hard at Goldman and my boss debuted as number one II ranked analyst. And actually, he was so happy with the work that I had done for him that he actually wrote me a personal check. He wrote me a personal check and said, "Go buy a Rolex," which is, I mean, you don't even hear stories like that. But there was challenges at Goldman and research. You had the separation of banking and research at the time for regulatory reasons. With the balance sheet being, traders couldn't take prop positions as much anymore, and so I decided that I would move to the buy side, and that's where I went to a reinsurance company called PartnerRe. They were building an in-house asset manager, which absolutely, brilliant. And it's the model of what people should be doing today, but it seems that they're doing the opposite, right? Because PartnerRe decided that they could generate better alpha, pay lower fees by having their own team in-house. And so that's where I got my first portfolio management responsibilities. And that was right before the GFC. During the GFC was where I learned about one of my superpowers, which was that given my really strong research background, I could analyze a company, know its liquidity, have really strong opinions on its valuation, and when everybody else is running around with their hair on fire, be able to put money to work to buy. It's kind of like many years ago, I read the book Shogun, and there's a scene where, and they turned into a movie or series, but where he's standing on the deck and everybody's throwing up around him, but he's like firm. And so that's where I learned that I could really buy, and it was probably the first time in my life that people told me to stop buying, and it wasn't the last time. So how did I then wind up at GIC? And I think that that's the next step in my career. So a few years after the global financial crisis, my wife had taken an assignment in London. It was supposed to be a few weeks, but it turned out to be a year. And then they offered her an expat package. So I started looking for roles in London. And at the same time, GIC was looking for a portfolio manager to lead its to lead the credit portfolios out of New York. And if one of the world's largest asset managers ask you to be the lead risk taker for corporate credit, it's really hard to say no. And so I told my wife I was staying here in New York, and she continued to work in London. After a few years, she finally came home. We were back together again. But that's how I wound up at GIC, and it was just an amazing experience.
Well, what an incredible journey to through that. Obviously, some huge events through through studying your university to then going through the .com and then into the GFC. You spoke about hard work. You've spoken about knowing and how knowing how to read a company. How much of your time in those early stages was self-taught? You're obviously someone that had to take on responsibility themselves, paying through your own tuition, going to Deloitte, then getting that MBA opportunity to then going to Goldman. How much time were you investing in self-development outside of the workplace versus the training and mentoring and guidance that you were given internally as well to get up to where you needed to?
Well, I mean, first thing, I've had the great fortune of having some really incredible bosses. Even at Deloitte, learning how to, my first boss, who I'm still friends with today, was at my wedding. I remember him bringing me to a site visit to interview a company management team, and I learned how to ask questions from an accounting side. But I mean, incredible mentor. When I went to Goldman, Joe was one of the best analysts at modeling, valuation. I mean, an expert in his industry and sectors, and he taught me everything about modeling, and how to think about putting together buy and sell recommendations. When I went to PartnerRe, I had an amazing boss who, you know, taught me about risk management, taught me about, how to structure portfolios. And then, at GIC, yeah, there was I basically took all those tools that I had and utilized them. But my journey included a lot of education. Like I said, I did the MBA at night while I was working at Goldman and Deloitte. I took my CPA, so I passed well, for parts of the CPA and got my CPA license. At PartnerRe, I sat for the CFA and I passed the CFA, so I'm a CFA charter holder. And they sent me to Harvard to do business school classes as part of the CFA Institute Management program. And even recently, I took a class in programming Python. I took a class in Claude. I believe that if you really want to be ahead of everybody else, because it's a competitive world, you really need to invest in yourself. So a lot of great mentors, but also a lot of hard work in building out my own toolkit.
You obviously worked incredibly hard to get to that point, and yeah, congratulations on everything that you've achieved so far.
It's not been easy. Yeah, it's like
It's
I
not.
said, a lot of zigging and zagging, not a straight line.
So, Mark, a decade at GIC, what did that teach you? That experience, obviously, of a fabulous experience, as you mentioned, but what did you learn there that you wouldn't have learned anywhere else?
Well, I mean, first of all, GIC was an amazing place, and I worked with some really great people. Our team accomplished some amazing things and generated some very serious alpha. But what I learned there that I couldn't learn anywhere else, the international aspect, working across a three-center team, Singapore, London, New York, operating at scale, size. I also learned that flows can be dictated by the state. Um, There's different products that we used, futures, synthetics. I got to build very strong relationships with the street, with the sell side, with analysts, debt syndicate teams. And then there was just all the complexities of working at a sovereign fund. But I think one of the exciting things, I also got to be a leader of leaders. And one example is a mentoring program I ran, which we could talk about for a whole other hour. I think we had 80 plus people. Um, I wanted junior people to feel more connected and integrated into the organization. But my real goal was to help senior people become better leaders. So we hired a coach. We coached them how to mentor, created question list for them to ask their mentee. Then we hand selected the teams, paired people up, and then have them meet regularly over coffees and lunches. And there was a lot of organizational learning that went on there for all levels, and I'm super proud of that. I'll also say I was really proud to have made it to managing director, which was a real honor to be one of the few people in the world to become the managing director of another country's sovereign wealth fund.
Incredible. That must have been such an amazing moment for you and your family as well to achieve that.
Well, it was a difficult time. Like I said, my wife, for 3 years, I was raising my daughter in the US while my wife was, commuting back and forth to London. It wasn't very easy, but it was fun. A lot of fun there.
And during that time, those 3 years with your wife commuting between the US and London, was it during that point that you started to think about doing your own thing? I'd love to hear more about when that started. That the seed was planted, or had it always been there?
I've always wanted to start my own firm, right? Maybe it was something I saw from my dad. Maybe it's in my blood. I remember watching people at Goldman leave to start their own funds back in the 2000s, and I thought to do it then, but and sometimes I regret not doing that. But I felt I was too young. I hadn't learned enough. But I also think that there is never a perfect time. It's like raising a kid. You think like, oh, should I have a kid now? Oh, I don't have enough money. I don't have a big enough house. You just figure it out, right? When you decide to make the leap, you make the leap. But I wanted to try something new. And, I couldn't start my fund while I was at GIC. And, you just get to a point where you want to be your own boss. And I think that you also think that you have a higher likelihood of success. And if you look at studies, it turns out, surprisingly, that middle-aged and older entrepreneurs have a higher success rate than younger founders. And why? Why do older founders have that? And it's because they have domain experience, they have industry expertise, professional networks, managerial experience that set you up for success. So there's not many times in your life you can do this, and so I decided to take the leap, and that's when I started writing the book.
We're going to come on to the book in a minute, Mark. We'll come on to that. Really looking forward to hearing more
Okay,
about that.
I'm excited to talk
Uh,
about that at some point. Yes.
Absolutely. But to come back to the point around, there not being a good time to set up a firm, there isn't, I speak to plenty of people at different stages in their career where they think about doing it. For some, I know that they feel like they've left it too late. For others, they feel that they haven't quite got the experience yet. And I think, for first time founders, that always, the concern or the challenge, particularly depending on where they are in life, is, looking for that Goldilocks moment. This is the perfect moment, when in reality there's no such thing. But what you were mentioning about more experienced founders, those who have had a decent stint in their career so far, have reached that point where they're able to then do that, becoming more successful than younger entrepreneurs, I think is absolutely true. One of the things that I see in some of the younger founders these days, certainly at the moment, is the ability to get distracted by shiny object syndrome, of which, with more maturity in your career, you have I think a greater sense of where you want to go without getting distracted too much. So very interesting you say that. So should we get into the book then,
I
Mark?
hit
Would
I
you
hit
like
I
to?
hit I hit I hit my Goldilocks moment. That's what happened. The timing was right. I felt like I had all the skills, I had the most to offer, and it was really just the right time. I had come off a period of generating some really significant alpha, and I think that what a better time than to be able to start then.
Well, look, let's get into the book, Mark, because again, that's something that a lot of people think they would like to do at some point, talk about wanting to do at some point, but very few get around to doing. So let's get into that.
To be clear, I'm not an academic. I'm a practitioner. And so I wanted to write a book that I could share with young professionals to let them learn about what it's really like, to be a credit analyst. But I also wrote it for senior credit PMs who may want to know and understand how did Mark do it? How did he run portfolios at scale? How did he think about risk? How did he think about generating alpha? And so I wrote it for them as well. But even bigger picture, I wrote it for venture capitalists, for private equity teams, for private credit teams, because I think it's so important to understand the entire capital structure. I think so many investors think only about their own asset class. They buy public equities, but they never look at the financial statements. So I thought that I could write something that could speak to all of these different constituencies, and also explain how I think about investing in credit. But I think that there was another side to it as well, which is that I was a portfolio manager that most outside people outside the industry had never heard of. And so I thought this was a great way for people to get to know me as a person, but also as an asset manager. And I think that one thing that has been absolutely been phenomenal is that people reach out to me all the time on LinkedIn because my QR code is in the back. It feeds to my LinkedIn page. They'll send me a note that they read the book, they love it. I'll go to conferences and total strangers, people I don't know, will come up to me, and some people I do know, and be like, "Hey, I just want you to know I read the book and I absolutely loved it. I gave it to all the people on my team." I mean, last week, and this is crazy, right? Some guy sent me a picture of himself reading my book as his baby sat on his lap. And he sent a note. He's like, "Look, I don't have a lot of time. I'm raising a kid, but I wanted to read your book. So I sat with my baby on my lap." And he sent me a picture of it. I should show it to you. It's just priceless. So financially, not the most rewarding thing. I don't know, but on a personal level, people have really connected with it, and that makes me so happy.
Well, that is brilliant. I've got the book here in front of me. I've only got to go online and see the impact and influence it's had on many professionals who work in the credit market.
I was super blessed to have the CFA Institute write such a favorable review of it. To say Mark Rieder is not a household name, but should be. And look, I wrote the book. I talk about the journey, similar to our conversation earlier, and I have 5 key sections. I talk about an overview of the debt markets, how they're different from the equity markets, to give somebody just a bigger picture, view of where debt sits in the investing ecosystem. Second section, I talk about how to be a really good credit analyst, what to look at, what to look for. Third section, how to build portfolios, how to manage risk. Fourth section, some advanced topics, financial engineering, bankruptcy, restructuring, what I call widgets, which are, all the new financial products. And then the fifth section is just lessons learned over my career, and then a little bit about leadership and working with good teams. Because I think probably if I had to give one piece of advice, just work with the best people that you can work with, because that's going to ultimately drive your success and theirs.
Through that process, when you were writing that, were you able to connect with new and former colleagues in a way in which around the book that gave you ideas, inspiration for the new venture as well?
Ideas for the new venture. Well, it's interesting that the way the book came about was when I thought about starting Lamar. I had 2 friends at the same time. One was a career coach that I've had for a while, and another is a good friend who worked on the street. And they both said, "Mark, you know so much about credit. Why don't you write a practitioner's guide, something that really highlights how you think about the market?" So I had to retrench. It's like the what I talk about, the tree rings, slow growth and fast growth. And so it was really a hard period where I had to just sit at my desk for 10, 12 hours a day and write. And it took me 6, 9 months to put that all together and to make it coherent. I think it's a story that you'll appreciate. But I'd be out for a run, right? I'd go to take a break. I'd be out for a run. I'd be like, "Oh my God, I need to add this." And so I would like stop and like try and take notes on my phone. And then I would go back and try and decipher them. And then I'd write about it. And it was a crazy process. When I finally finished, I didn't actually believe that I was going to get it all done. And when I did, I gave it to my wife to read, who was, probably the toughest critic. Because I said, if she, is not embarrassed by it, and she, she thinks it's good, then I'm in the clear. I'm not embarrassing the family. So she read it. Of course, she was tough. She made some critical comments, and we went and we made some minor adjustments. I had also given it to another friend to read, and also incorporated his comments as well. And then we went out and we pushed it out. There was there's a few funny stories about it that when you do a book like that, like you have to do like all these formatting things so the words don't spill on the page. You don't have widows and orphans and all these things, cover design, all these parts that you don't think about. And so when we push it out, I was so happy. And I was talking to somebody at a conference, oh, I just launched, we just published the book and it's there. So, oh, I don't read physical books. Do you have it on a Kindle? So, oh God. So then we had to go back to the drawing board and take out all the forced paginations and all this stuff out so it would fit on a Kindle. And then I was like, okay, it's a hard copy. It's electronic. You can read it on your phone. You can read it on a laptop, whatever you want to do. And telling somebody that I wrote the book, and they're like, oh, do you have an audio version? I only listen to books. I only listen to audiobooks. And I was like, oh gosh, I was like, I just can't do that. I can't read this. It doesn't really, I mean, I don't know whether it really lends well with the, all the graphs, charts. I had created a lot of business case studies, because I was always taught that you shouldn't just lecture to somebody, but you should ask them questions and make them think. So I created all of these case studies to help people think more broadly along the way. And then I include the answer keys. So I don't know how that would translate into voice, but Amazon reached out to me and said, Mark, we'd like you to be in our test program. We'd like to have AI read your book. And so they sent me 20 different voices, and then I had to pick the one that I thought sounded the most like me. And from what I've heard, it sounds pretty okay, but I haven't listened to the whole thing.
Well, the aspect of the idea of putting out a physical copy out, putting a book out, it goes against I think the internet social network era of Facebook's mantra, move fast and break things, and get stuff out there, iterate, do all of that. So in order to get it to the point where you hover over the decision to then go live and to press print, was that something you took your time over doing, or was it a case of when you knew, just like, let's get it done and it's gone?
There's a great saying about, deadline. And so I set a deadline for myself. Like if I didn't publish it, then I'm dead, right? Like I need to do this, right? I can't let it sit around for forever. But, like anything, when, I'm sure, Bill, when you put up a write up on LinkedIn, like you want likes, you want people to like it. You want somebody to validate it. So, again, I've gotten amazing feedback from people who've read it, amazing feedback from the CFA Institute. And so I'm just proud of it. So, and I'm happy when people read it and tell me they love it.
So, Mark, let's talk about LaMar Assets, your firm, getting that
Yes.
established. But well, why don't we start off so I asked this question because again, talking to plenty of business owners, operators across different areas, coming up with a name can be just as difficult as the area of focus, the niche, all these different things. So let's focus on the name because it's not I think in the usual sort of fund, where you've focused on something of historical context, or mythology or theory. So LaMar Assets, what's the journey to that?
A lot of people put so much stock into creating a name as if it's the most important thing. And, I think we wanted to call it Just Make Money, but, I don't know that you could actually do that. But when you start a business, you need the support of your spouse. And so, when you break it down, Lauren is my wife, I'm Mark, love Mar, and that's how we came up with the name. But I thought there was also a really beautiful side to it. And if you read Ernest Hemingway, The Old Man and the Sea, Lamar is what fishermen call the sea when they love her. That's what he says in the book. And in my view, the sea is beautiful, it's bountiful, also very dangerous. And so I like seeking out big catches, fishing with my team, and and all everything that comes along with it. And so I thought it was a great name that would capture all that, and it fit into the box of I think there was a great funny Bloomberg article a few years ago that said every fund was a name of a body of water, some sort of rock or earth or something like that. So I guess I have the body of water.
Well,
Black
that's
rock, blue rock, green, I don't know, whatever.
so Mark, how did you think about constructing the business from a standing start, and what's the part that's most surprised you about all of this so far?
Well, yeah, I think that it's really interesting that you go to build a business. You know all of the different pieces, right? It's a jigsaw puzzle. You know all the pieces. It's just a question of assembling them. And I had some of really the brightest people in the financial industry and credit, who want to be on the team. I think I've had 30 people ask me for a job. Um, and so, in terms of having people who can make great investment decisions, that's there. The infrastructure side, you think that would be more challenging, but the truth is there are so many people who are willing to help out with legal compliance, regulatory systems. You've got companies that do fractional CFO and whatnot. And so, um, you know, I've got a Rolodex of so many people that are willing to help. So um, I think that's when you're building a business like that, you need the investment acumen and you need the infrastructure, and those key ingredients are there.
And the process of raising capital for the firm.
Yeah, that's by the way, the hardest part. I was surprised by that. The investing part, I think, is, I want to say it's easy. I've been through market cycles and you want to generate great returns for people. And you always say, past returns aren't predictors of future performance and whatnot. But when you're building a firm, of course, you want to be able to show good performance. But I think what's been interesting about the raising the capital is that you have, an allocator community who thinks about things a little differently, right? They focus on things like volatility, correlation, and sometimes I think they look at the wrong things, quite frankly. They wound up in private equity, they wound up in private credit, and really you're just taking vol and compressing it, and at some point it springs up. Not thinking about liquidity, and then until you can, face redemptions, or you want to redeem and you can't. And so I think, fundraising is a lot different than portfolio management. It's a bit ironic. I thought that allocators would be really happy to talk to a portfolio manager to hear their thoughts on the market, how they're positioning. But actually, a lot of times we don't entirely speak the same language. So that's been a lot harder than I expected, because in a lot of ways they want to box you. Do you fit into this box? Do you fit into that box? And we think that we're out of the box thinkers doing something completely different. And so there's a lot of education going on. I think one of the hard parts is that you can't market to somebody by telling them what they shouldn't do. You need to tell them what they should do. And I think that's a really, really important part. I'd also say that it takes 99 no's sometimes to get to one yes. So yeah, fundraising has been probably the one bit that I think is harder than I expected.
And how do you balance running a portfolio, running a business, raising capital? They're both, well, the three of those are very different skill sets. How do you balance that as a founder?
It's really just time management. That's it.
And and with that time management, what does that look like then in terms of day to day for you? Maybe not so much the schedule. I'm not saying from a calendar perspective. You mentioned earlier on in your career you worked incredibly hard. What does the day look like for you now then, and how much time are you, whether that's split in a different fashion between each area of the business, but how much are you doing on a week to week basis across all three, or individually? What does that look like?
Yeah, I mean, I'm constantly watching the markets, modeling companies, posting and writing my thoughts about the markets on LinkedIn to share information, taking meetings. Last week, I spoke at the CFA Institute of New York conference, on their high yield panel to talk about my views on the markets and what I think is, some of the challenges right now. And then, attending conferences as an attendee. So yeah, I mean, super busy just trying to do it all. And then that's not even including my role in a few other ventures that I have going on. And I could talk about that too, because I'm a senior advisor to Fourier, an absolutely brilliant group of people who are focused on systematic convertible bond arbitrage, operating between New York and London. And our my value add there is, our view is that convertible bonds have a credit component that's often overlooked. The team is doing some really interesting things with equity vol, and so my expertise in credit and also my experience in trading is helping them to shape the investments that so we can make alpha generating trades. But I'm also working on. I have another project I'm working on. A friend of mine who's very well connected in India. We've been looking at SMEs together, small and medium term enterprises who are looking for capital. Honestly, it's so much fun. There's a lot of founders of these businesses. Not all of them are financeable, but I get to wear a lot of hats. I'm a private credit investor, a private equity investor, a banker, an analyst, a therapist, because a lot of these companies need advice. So I get to wear the credit, the equity hats. And be an investment banker. And look, I think there's some really interesting companies that we're meeting. I've spoken to some people who might have room for that, and so very interesting. Stay tuned. It could be a part of LaMar. Not really sure yet how that will entirely fit in. And then I have a friend who's a friend of mine who's a quant who focuses on tail hedging and credit, and he wants to do some very interesting things with my book in AI. I won't say much more about it, but it's just another work in progress. So I've got a lot of different things going on. As a founder, you're always you're rolling up your sleeve. You're doing a lot. Your own business cards, your own marketing, your own website. And at the same time, doing all of the day-to-day job. So it's a lot of fun. It keeps me very busy.
Quite. I mean, you must have the largest hat rack of most people I know for sure, Mark. Doing everything that you're doing.
Remember, Bill, I went to school at night while I was a research analyst at Goldman Sachs.
Yeah. Wow. Yeah. I
I
mean,
I
that's
could do a lot.
pretty.
My
That's pretty
high
pretty
energy.
high energy indeed. Obviously, achieved some wonderful things so far. You've got some really, amazing goals that you're setting yourself. How do you stay focused? How do you have the energy, the drive that you do to keep you going day in, day out, week in, week out, as well as with your family around you? How do you keep fit and focused?
Well, I'm a runner. I love to run. I helped start a running club in New York City called Central Park Running Club 5, 6 years ago before COVID. And so, I like to run. That allows me to probably drain some of the cortisol. But also it gives me time to think. I think that sometimes, if you're trying to think all the time, you can't. But when you step away, sometimes you can. And so, at the running club, by the way, just as an aside, I mean, the people who go there, who wake up at 6 in the morning, very driven people. They want to get a workout in. They talk to other people while they're running. Generally, more driven, more successful in their careers, and much happier because they have the human connection. So I like to run. I like to spend time with my family. My daughter and my wife and I went to go see Martin Garrix this weekend at the Barclays Center. My daughter wanted us to take her to electronic dance music, event, and we went and we just had a blast. So yeah, you got to make time for family, for exercise to keep fit, and then the intellectual part about the job. I've always said you need, body, mind, and spirit. You have to keep all of those in flux in order to be really truly successful.
Well, and Saturday, I mean, just to come back to that on a personal note, I mean, after most gigs, I normally walk out a bit a bit drained, looking forward to getting home. But for you, obviously walking out after that on Saturday night with the Knicks, what was that like when you left the venue?
Yeah, I mean, if look, had we known that there was going to be a Knicks game that night, we might not have bought the tickets, but who knew, right? So there was a point at the concert where everybody was looking at their phones and watching, and it was like the final 20 seconds. It was the longest 20 seconds ever, and so, it was amazing. And then they stopped the concert and he started playing New York, New York. And, everybody, there was like, confetti dropping down. Everybody
Mm.
was chanting and swaying. It was probably epic. Look, the game wasn't in Madison Square Garden. It was away. And so, but we left the concert at 1 in the morning, and we were in Manhattan because we took the subway through. And I mean, this city was just erupting with energy. People were singing, people were so happy. And my wife and I talked about it. It was one of the few times in New York where we felt like people just had a reason to connect. I was on the subway, and the guy to the left starts talking to me, the guy on the right starts talking to me. Most people don't talk to each other on the subway, but everybody was just so happy. And it was like a flash mob of people singing. I think my daughter caught some of it on video. Like, it was epic fun. But look, I think that there's a lot, in talking about the Knicks, since you brought it up. Game 4, they were down, and they had just come off a game 3 where they got clobbered. And game 4, they're in the third quarter, 29 points down. No team in history had ever come back from that point. And I mean, you could just feel the deflation. Like, most people went to sleep. They're like, I'm already tired. I was been up twice this week. It's a bloodbath, a massacre. And and then everybody, found out that they won the following morning, right? Because people didn't even stay up for it. And I think that, this is really important. And it ties together everything about what I'm doing. They were committed, they played through to the end, and when everybody doubted. And I think there's a huge life lesson in that the game isn't over until the buzzer goes off. And people will count you out and think that you're not going to win, but you could still win the game. And you just got to lock in. You need to focus, and you can't beat yourself up, but you just got to keep on going.
So let's talk a bit about the markets today and where things are at, and then how that impacts your decision making and planning as a founder.
Yeah, and we're in a really interesting period today, and markets are at valuations seem really stretched in equities, credit spreads are really tight, and you say to yourself, Have I seen this movie before?" I think I wrote a lot about this in the book. Credit cycles happen. You have periods of euphoria, exuberance, FOMO, tight credit spreads. And if I go back in time to 2005 to 2007, when I got my first portfolio management responsibilities, it was really tough. Credit spreads were nauseatingly tight until they weren't. But that took a few years. And I remember that the pain that I had to endure being underinvested. And it's probably not too dissimilar today. There's a lot of IPOs. That tells me that companies think that their stock is overvalued because they're issuing equity. The high yield market is at multi-decade tights and spreads for a reason. If you look, the percentage of double Bs, the highest it's ever been at 60%. But a week ago, double B spreads were at 152 basis points. If you go back 20 years, the tightest that they've ever been in 20 years is 149 basis points. That's really tight. And you can go back further and find examples where they were even tighter than that. But I think that you have to recognize that risk and reward may be skewed. So there's a period of time where it's important to make sure that when the credit cycle turns, that you're not impaired, that you're not making the mistakes that I think people make, which is that they go down in credit quality. They reach for down in capital structure, and they'll take unnecessary risks just to get an extra basis points to beat the market. And instead, this is the time where you should be kind of retrenching, building some dry powder, and being prepared to take advantage of opportunities, because you're really not missing that much when credit spreads are so tight. And so, but that could be a really difficult period. And I think about the movie The Big Short. You saw it. Michael Burry is the market's going against him. He's got these heavy metal playing on headphones and trying to drown out the noise. And so, I think it's like that sometimes. There's a lot of pro-cyclical behavior, but the problem is that when managers, are pro-cyclical, they wind up not being able to buy into sell-offs, not being able to take advantage of volatility because they're impaired and have drawdown. And so, we try and operate a lot different from that. It's a successful strategy. The strategy that I've done over the last 20 years of reducing risk into market rallies, to being fearful when other people are greedy, and then being able to be greedy when other people are fearful.
Mark, and you've discussed today about the mentoring programs that you put together at GIC, the development of senior professionals. If we focus on the current generation and thinking about the next generation ahead, what have they got at the moment, this current generation, that previous credit professionals didn't have? And conversely, what do they do better? And when you think about that next generation of credit professionals that are coming through, with AI developing the way it has done, you mentioned Claude earlier, but thinking about that and how that alters the skill set, the mindset, and the overall growth and development of the industry.
Yeah, look, I mean, starting with the older professionals, they have perspective. They have a sixth sense of how things may go, experience dealing with challenges because they've seen them before. But the younger generation, and absolutely impressive, they add a lot of value with their fresh perspective, their ability to utilize technology. And I think that there's a great lesson in that. And when we talk about the mentoring program, pairing junior people and senior people together, I think they actually realize that senior people can learn a lot from junior people, and vice versa. So I think the younger generation now, they have an ability technologically that is superior. I think the business is changing in that, way back when, if I wanted to pull financial statements together, I had to go and I had to read the 10K and the 10Q, and now you can go in and you could say, pull me the last, numbers, right? And it does it almost instantaneously. You have to check them because you're not sure they're entirely right or whatever. But the technology is there, and whether it's like you said, a Claude, or whether it's a Bloomberg Ask B, like you can get some really interesting information very quickly, and that's transforming how fast you can react.
For you, Mark, thinking back to those earlier days at Goldman, at night school, thinking about your own career, how that developed, from working at Goldman to putting yourself through night school at the same time as well. How do you think your career would have looked differently, and without the fundamental training that you went through yourself?
Well, you look, I rely heavily on the fundamental training. I think that's what allows you to construct really great portfolios. I mentioned this in the book. Anybody could put a portfolio together, whether it's stocks, whether it's corporate bonds, loans, private credits, but only a really sharp portfolio manager can buy the right ones and generate alpha. And so, we take a really big fundamental perspective in terms of things that I wish that I would have done more of. Yeah, sure. I think there's probably a point where I was like, I should program more. I should build my own systematic strategies. But the reality is today, you can go into Copilot or Claude and ask them to write you a Python code, and it takes seconds. And you don't need to know how to be a programmer. I took a class because I wanted to be able to read the code and understand it if there was a mistake and tweak it. But I think that sure, there's always the shoulda, coulda, wouldas. I've been constrained in time most of my life, and I've done a lot of continuous learning. I always wish that I could have done something a little bit more, but I'm really happy with the path, and I think that going forward, fundamental analysis is always going to stand a chance. And I wrote about this in the book with the coming of AI. People are afraid, active management or active management is going to die, and to that I say, well, you know what? Nobody knows the future. And so a human stands as good of a chance as a computer. And I think that will soon to be proven out.
What are you most excited about now, at this point with LaMar Assets, and where you are with business?
Well, I'm just excited to try and build something. I think that's where we are right now. I'm super happy to go to tell the story to people, to speak at the events that I speak at, and hopefully, somebody's some people come along for the ride. I mean, that's all we hope for.
Mark, speaking from a position of experience, a lot of people wonder what it takes to go out on their own. What do you think it takes, and what have you found in your own journey?
Well, people ask me all the time, Bill, whether they should do it. And I tell them, absolutely not. Don't do it. It's a very humbling experience. But, look, it depends on your willingness to do hard work, your perseverance and your grit. I talked about the Knicks coming back. You got to just keep on. You got to be locked in. You got to continue on. And when people are doubting, and I think probably if I had to leave you with one final message, and I think this is really interesting because we talk a lot. I do a lot of bond math, in what we do, but there's also a lot of people math, and there are people who add, there are people who subtract, there are people who multiply, and there are people who divide. And so I always try to add value. But some people that you meet, they'll try and subtract value. They'll complain. They'll tell you what you can't do. But then there's people who multiply, like you, Bill Blair, like you. They're connectors. They add wind to your back. And then there's people who divide. I talked about that. They'll try and bring you down. They'll try and create division. When you're on a journey like this, you need to work with people who add and multiply, and you just have to let go of the rest.
Mark, thank you so much for coming on the show. It's been a great conversation. I've learned so much today, and I know others will get so much from the value, the insights, the wisdom that you've shared. For anyone who would like to connect with you, who's either read the book, is going to read the book, what's the best way for them to get in touch?
I'm on LinkedIn, so anybody can find me real easily. And the book is available, and I'll say the book is available on Amazon.com. You can flash up the QR code. I don't have it with me.
It is, and look, I'm here across the pond. I ordered it at Amazon. It was delivered within about 16 hours the next day, thanks to Prime. Not that I'm on any commission or any Amazon affiliate plan, but it was great to receive that. I'm working through it, and again, thanks so much, Mark.
Thank you so much, Bill. This has been an absolute pleasure.
Brilliant. Thank you.